Hi guys, welcome back. So today a lot of the education stocks have dropped dramatically. A lot of the Discord members have asked me the same question today. Is it okay to buy the dip of these educational stocks like TAL, EDU or GOTU? I want to come to give you my opinion on this to explain why do they all drop so hard and would it be a good idea to buy the dip. So if you have been following my channel, you know that I have traded TAL education a few times already. The first time was on this day on January 15. A Friday, it was not moving for a while and I recommended to buy the dip. After a few days, we had a great run up. I remember I shared my call option because I said I have never seen a call option that can grow 1600% in one day. And then also I have sold it in February, which I show on the Discord when I sold my position. And the second time I have bought the dip on this day, also a Friday, the end of March. It was driven down because of the Archegos margin call, at most dropping around 15 to 20% that day, something like similar with today. I said it has basically wiped off the increase for 3 years. So I bought the dip there and later on I have sold out of my position and I have also showed it on the Discord. So I always thought TAL is a good company. So every time it dipped dramatically, it would be a good buying opportunity. And the reason I sold it was not because I stopped believing it's a good company, but because a lot of stocks in my portfolio are kind of hyper growth stocks and TAL is kind of a steady growth stocks usually. So that's why every time I take profit after the trade. So seeing it dropping like this day by day, being a super volatile stock like a penny stock, this is quite surprising for me. It was not expected. So we really need to dig deeper into the real reason why it's dropping so hard. Does this company, alongside with the other education companies, do they still have a good future? Are they still worth investing? Now, if you don't know what is TAL or EDU, they are the biggest education companies that have existed for a long time. They've got history, they've got themselves established in the Chinese market. They have been in operation for many years and have been quite mature already. They are for sure not a small cap. EDU is called New Oriental Education and Technology Group. It is worth the market cap of $15 billion, which has been cut by half at least. So before it was worth more than $30 billion. And TAL has a market cap of $22.9 billion right now at this moment. It had dropped 60 to 70% of its value from the peak of $90. So it was worth around $50 billion before. And they are included in many Chinese investment ETF, investment funds, mutual funds, or index. Definitely the leader of the sector and quite a big sector. And for them to drop like a penny stocks recently, I mean, if you don't look at the market cap or the name, I almost thought this is EH or LKCO. So it's very, very unlikely the recent movement. This has got to be a very black swan news that can drive down the value so much, because cutting the value this much cannot be any kind of panic sell driven by retail investors. It has to be institutions. So let's see. Here we see that the big institutions like Hill House, Tiger had sold out their position in TAL and YQ Education, and Tiger had sold out a position in GOTU. So Hill House had emptied the position of TAL and YQ in first quarter 2021, but also established a new position again in TAL. In EDU, Tiger emptied the position of GOTU. Greenwood Asset reduced 77% of TAL. So obviously these institutions, they knew about the news much earlier than us retail investors, because these institutions, they have been holding the shares of the company for a long time, and for them to finally give up, it must be because they know something we don't. Especially Hill House has started to reduce the position last year already. So this morning during the pre-market, there was media that reports the Education Bureau in a district in Beijing was going to release a new regulation in which the educational institutions outside of school cannot offer classes during holidays. Scholar academic education institutions cannot go in public and cannot advertise. And this news had driven all of the Chinese education companies' share price to drop really hard. Right away when it opened, TAL dropped 12%, EDU 11%, GOTU 10%, and some other smaller ones can drop up to 30%. But turned out that 11 or 12% was only a beginning, because at most it was dropping 20% before the closing. So it was not a news from official media, and we are not sure if the regulation would pass through in the end. But the sure thing is the share price got a big hit, because it's not surprising that the institutions holding this company or related company in the sector would want to exit first and wait on the sideline, because with this kind of policy, it's full of uncertainties. People are not sure what's gonna happen to the future of all of these education companies. And the sure thing is no one would want to invest in a company that the government policy do not favor. That is the sure thing 100%. This is just the number one rule of investing in China opportunities. This is why I usually would try my best to understand the strategy of the Chinese government. What would be their next move? What they encourage, what they don't encourage. So I would feel safer in my choices of investment. So in this case, we really need to figure out and understand why the Chinese government is giving out regulations like this. Because this is not the first time. Actually, back in February, the government was trying to discourage the over marketing expense from the educational institutions. But that was just to limit the marketing expense. And then later on, they also said that they want to try to reduce the stress level of kids or students by limiting the amount of time or hours of outside of school education. But even so, back then the share price did not take such a great hit. And this time, if it's really to ban completely classes during the holiday, it would for sure take away a large chunk of revenue for most of the education institutions. Now you might wonder, what's wrong with the classes or education outside school? Isn't it better to have them being smarter, learn more things, and perform better in the future? Isn't it the country's or the government's interest? So why do they want to reduce the stress? So I have put together my thinking and share my point of view. Nowadays, the kids in China are under too much academic stress, and basically every one of them almost like had to go to other out-of-school institutions to study more after class and weekend and holiday with very little rest, because the teachers just expected the parents to send their kids to one of the institutions anyway. So it's kind of like a program that's mandatory. And if everybody does that, then basically parents cannot make exception. And we know that they are quite competitive and they feel competitive, both the kids and the parents. So the government needs to regulate on that. Otherwise, it's worse and worse, because this has become the anxiety of education that almost everyone share in China. And what this anxiety does, it is the low birth rate in China in the recent years. The latest census statistic shows that it had been 10 years since China had been growing the population in a low rate. It's still growing, but the growth rate is low. And a deep reason behind it might be because of the stress, the anxiety of education, because the parents are under too much pressure to make sure their kid receives the best education with the most attention and budget or expense on education. So that's why a lot of people do not want to give birth to a second child because of that. And I also think there's more than that, as we know that China had been growing the economy faster and faster in the recent years. And when a country growing this fast from a very raw foundation, the first step is to grow economy. And once economy is up, there would be still a lot of other things to be solved. Like for example, the culture may not catch up with the speed of the economy growth, and culture comes from education a lot. That's why I said before that I thought education in China still has a long way to go, a lot of room to improve. And I really think it is quite necessary for the country to grow or refine their culture development. And I really think right now at this stage, it's quite natural and necessary to pay attention to more cultural development, more refinement that can grow the the Chinese unique cultural identity instead of importing a lot of the cultural icons from the West, and very importantly, increase the level of creativity from the youth. And this would be the next strong source of talent to back up the new technology they want to develop in the next coming decade. If this is what they're thinking, then it would make very much sense for the government to regulate academic education to limit the amount of stress on the academic education. And this would again align with the strategy of the country in the longer term. Now you might wonder, in that case, does that mean these companies would have no future anymore? Well, it's not entirely true. Now I will give you my supporting arguments on this company. First of all, by limiting the over expense of marketing, actually it's somewhat good for the fundamentals of the companies. Why? Because before it was a lot of education companies fighting for ad spot to advertise by overspending. So that's why a lot of companies had good growth of revenue and yet still at loss, because it is a lot of spending in marketing. So by limiting the competition in marketing expense, it can help everyone reduce their marketing budget. And what benefits the most would be the companies that are already famous and can simply pass along or advertise or get new students by the word of mouth, which in this case would be beneficiary for the bigger company like TAL and EDU specifically, in my opinion, because they are the most famous ones and should get natural traffic by less marketing competition. And second, I said several times before on my video and the Discord, I think education and hospital are the two areas that the demand is always stronger than the supply, because it is so deep in the Chinese culture to want their kids to have the best education, the best score, to be competitive. It is so deep in the culture that it's very unlikely to change overnight, I think. And also, the school environment is still quite established already, hard to change as well. The teachers have built in the norms that the students do certain things out of school, and it's unlikely to be changed fast. Based on this, it would make sense why just now we saw the news that's only in one district in Beijing. So there is a possibility that the government wants to try it out in a district of the city first to see how it goes before they refine the regulation and see how it can roll out. It would still take time, I think. And if they think it doesn't work, there's still room to improve. And third of all, I've mentioned before that I really like the CEO of this company. I have listened to his speech before. I think he's a very passionate entrepreneur that really care about the wellness of children and very passionate about the business of education. He had explained since the beginning how he crafted out and refined all of his products and services, and how they managed to attract new students, new customers by mainly word of mouth, because people recognize their effort and it shows in their products. So that's how they grew since the beginning. I have also heard other successful entrepreneurs describing the CEO of TAL to be very passionate. And I heard that he doesn't attend to any PR event unless it's to talk about or discuss or brainstorm how to refine his business strategy. So investing in a business is a lot of the times investing in the person too, especially when it comes to difficult times, because this is when you should consider whether you believe in this CEO, whether he can evolve his business based on the new environment, the new demand, or the new trend. And I think if it's the same CEO to remain in the position, the founder, I think eventually he might be able to adapt to the new trend and understand why the government encourage more cultural or creativity education. And hopefully he can adapt to this demand and evolve or refine his business model or classes or product in order to continue his success from before. Because at least he has got the customer base. They are usually loyal and would likely follow from primary school to middle school to high school if they agree with this business. So this would really depend on whether the CEO can continue to innovate and adapt to the new trend or work around the policy. And last, sometimes when the situation or the environment is difficult, it might be a black swan that end up destroying a lot of the small businesses. And in the end, whoever remains would be the stronger ones or the bigger ones. that has good leadership or ability to innovate. And this industry, this sector, happened to be very, very competitive in the recent years. So eliminating a group of small institutions might actually, in the end, be beneficiary for the bigger ones. For example, COVID-19 had made a lot of small bars and restaurants close permanently. And in the end, whoever remained might be the bigger ones, like the franchise restaurants. And after the pandemic, they would remain and they might end up having better business than before because of the elimination of competition. So in terms of the price right now, whether it is a good buying opportunity, it really depends whether you want to treat this as a short or long-term play. For a short-term trade, I think right now it's not far away from the next support, so the risk-reward ratio is okay. So you can always buy the dip and take profit at the rebound because there is still risk afterwards. We don't know whether they would release the policy later or expand to a bigger region. So as short trade, I think the risk-reward ratio is okay. You can buy the dip, set a stop loss, and take profit after the rebound at resistance level. And if you want to treat it as a long-term investment because you believe in the sector or industry or this company, then I would suggest to add in slowly or wait for some stability. Or you can open a position and continue to buy the dip. The next support is around 32.8. But if this turns out to be a false alarm, you know what the reaction is. It can bounce back up quite fast too. So when we invest in the Chinese companies, we need to try our best to understand the strategy of the Chinese government in order to predict the trends in the future where the business are going. Is the need or demand getting bigger and bigger and aligns with the government strategy? Whether this is a trend that's undefeatable, and if so, it's always a process of elimination, a speed up for the bad companies to go out of the game and the good companies to become stronger. So I hope you enjoy my analysis and hope you find this helpful. And if you have enjoyed this video, please give me a big like and write me a great comment, and I will see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.